One of the questions that I get the most from people is in which altcoin should I invest in, and they usually expect me to drop a few super low cap altcoins that will go 100x in the next bull run. So in this video I will show you one of the methods that I personally use to determine these coins. Stay tuned. Hello guys, my name is Željko and welcome to Unsymmetry. So firstly, there is no perfect method or a single strategy to assess which coins will give you the best performance in a long run. So usually you want to combine multiple strategies to identify these coins. Still, one thing is certain, the price doesn't lie, and what I mean by this is that the price shows the actual demand, and if demand increases, the price of the token goes up, if demand decreases, the price goes down. It's pretty simple. When we compare the price of Bitcoin and altcoins, usually they are highly correlated. When the Bitcoin price goes up, altcoins follow, and when the Bitcoin price goes down, altcoins drop in price as well. There are of course some exceptions, but this is a general rule. The main difference is that usually altcoins retrace more, so today we can see that many of them lost even 99% of their value in comparison to previous all-time high, while the Bitcoin lost only 77.5%. When the markets are rising, altcoins can often provide more significant gains as well. Some of them went 100x plus in price during the previous bull run, Ethereum went like 60x and Bitcoin went only 20x in comparison to low in that market cycle. Also make sure to identify what's the trend of overall market before looking into anything else. One of the things that we look into to determine where we are in a current market cycle is to look at the top of the market and compare it with how much the Bitcoin price retraced. In 2014 we had 86% retracement, in 2018 we had like 84% retracement, and today in 2022 we are currently sitting at around 77.5% retracement. Also in June this year we had a local bottom with a big pullback in price where the Bitcoin price retraced around 74.5%. The main goal of analyzing this data was to spot the trends for different coins, compare their relative strength and analyze how they perform against Bitcoin and against each other. I looked on the internet to see if anyone did anything similar, but I haven't found it. You can plot charts on TradingView, or you can look at how different assets perform against Bitcoin on Ether, on CoinMarketCap and CoinGecko, but I haven't seen a full comparison and I thought it would be useful. So let's look at the data. So I took the prices of top 50 currencies that can be traded on Binance and I look at the all-time high, which was 11th November for Bitcoin and majority of altcoins. Second, I took first local low that occurred on 18 June when the Bitcoin price dropped to 17.7k, and the last lower low on 21st November when the Bitcoin dropped to 15.7k. The long-term goal is to expand this further to top 200 asset classes and do monthly updates as long as we are in the accumulation phase, especially since this will probably be the longest bear market for crypto. What does this sheet tells to us? It tells us a lot of things actually. So in the first column we have a rank, then we have a ticker, then the all-time high price, then the first local low, second local low, and the current price. The first column with the green and red fields is comparison of all-time high to local low in June. The second column with the green and red fields is comparison of all-time high with the current market low or the local low if we have a new low in the future. And the third column is comparison of all-time high to the current price. The last column represents the change in price from lower low in November in comparison to the current price. So the first three columns represents the value that the asset preserved in comparison to all-time high, while the last one represents the recent change in price for a certain asset. So the first three numbers tells us how strong is the asset actually. Are there a lot of people that believe in the project? Are the people that are invested just looking to book their profits and exit in search of another good asset to invest, or do they truly believe in the project or technology? There are many indicators that tell us these things, but these numbers sum up all of them. The news, the number of holders, the future roadmap, the inflation of the coins in the future, macroeconomic factors and everything else. This is why I believe that this is one of the key things to look for. You don't want to invest in coins that lost 99% of their value because it's much less likely that they will actually have strong performance during the next bull run or that you're actually gonna be able to buy them or sell at the right time. You want to buy coins that preserve more value. Yeah, that decreases potential upside a bit, but it decreases the downside way more. And in crypto, the upside is already big enough, so preserving the capital should be the main goal. Of course, gains are nice, but you don't want to waste a huge percentage of your portfolio on some shitcoin. Short stop. If you find this video valuable or if you have any questions regarding the data I showed you or anything related, please write a comment below. It helps with the YouTube algorithm to show this video to more people. Thank you. So, why do I use 3 different numbers and what does this tell us? So, the first one shows us the value preserved during the start of the bear market when we had a sharp decline and the biggest disbelief in the community and when many investors and traders quit the markets in the huge losses. And it shows us if these investors are willing to hold the tokens if the markets keep going down. So, this is exactly how you can utilize this. If the market continue going down, the assets that are performing well might be the best ones to hold. If you take a look at the second column, you can notice that a lot of coins have higher number in the second column, which is not logical, especially if you look at the Bitcoin, which decreased by 3% more. But the reason for that is that many people thought that the bear market is over when we got to the lower low and that we might bounce back, so they don't want to miss out the gains. If you look at the both second and third number, you can get an idea about the trend and direction of which coins people want to accumulate the most and which ones they are dropping. When you look at the last number, it shows us the correlation between the previous two and it represents how much the price increased or decreased in comparison to the last lower low. Of course, some of these changes occurred due to recent events specifically related to these tokens. Chelsea is a good example because people started accumulating prior to World Cup and now they started dropping it, which we can see in the numbers. Ape is another coin which falls into this category because it released staking a few days ago and it's highly noticeable in price as well. Solana was a big percentage of FTX portfolio before the crash and now we can see that it started stabilizing a bit. Trust Wallet gained a lot of traction during this period as well due to problems with centralized exchanges and due to the fact that many of them went bankrupt. Also, some coins might not be that highly relevant because they were released recently, as Aptos for example, so we lack a little bit of data on them. And some other coins like Luna for example lost like 99.999% of their value, so I would completely skip it from my considerations to invest at all. There are many ways how you can utilize this data and even I probably forgot to explain some of the conclusions. Also, I have one disclaimer, be aware that this is looking at a pretty short term, like a year or so you should not pull the conclusions like which asset gonna dominate the markets in 10 years. Instead, I would use it to predict the next few months maybe or the next market peak. Also, I would not start accumulating altcoins yet and I use this mainly for trading purposes currently. The first reason is that we haven't reached the bottom in my opinion and we're either gonna have a V-shaped bottom with a fast recovery and the start of the bull market or we're gonna have a slow bleed for a while, probably at least for a year, and that would delay the start of the next bull market. The second reason is that if you look at the previous market cycles, it would expect Bitcoin and Ethereum to start rising first in comparison to altcoins. Macroeconomic factors are not that great either, which is one of the factors that could affect the start of the next bull run as well. We need to see US Fed stop tightening and we need the retail investors to recover from recent events to see increased demand since the current trading volume is really low. Also, I really hope that this won't happen, but we could see more bad events coming, like more exchanges going bankrupt or tethered, depegging from the dollar, and that could probably indicate the market bottom, but again, I really hope that this doesn't happen and we don't end up in this situation. So, I'm not saying you to invest in these coins, I'm saying that this is something you should definitely consider when you're choosing the coins that you're gonna invest into, because choosing coins that are showing some strength during the bear market could result in gains during the next bull run. Also, this is a great way to see where the smart money is going, since the people that are investing during the market bottom and accumulation phase are actually the people with the potential to make the largest gains during the next bull run as well. Thank you for watching this video. I hope that this will help you to make better investment and trading decisions. Also, don't forget to subscribe and follow me on Twitter as well. See you in the next video. I appreciate your support and have a wonderful day. Bye. Be patient. In the past, I often thought that if I am always in the trade, I will get better returns as well. But the markets taught me some lessons. It is okay to just sit and watch the markets. Wait for the great opportunity and they will come to you.